Okay, recording video on Saturday the 3rd of May 2025, just gone 8:03 p.m. Chicago time. Do hope you are doing well. So it's the weekend and time for another weekend futures market recap, where I go through 15 of the largest futures markets and I show you what I'm seeing on my charts. Do hope you've had a good couple of weeks trading. Apologies there was no video last weekend. That's because we're back in Australia. We arrived a couple of weeks ago, spent the first week in Sydney just doing personal business, catching up with friends, and then last weekend we were driving north from Sydney. We're in Noosa at the moment. I stopped on the way in Byron Bay, beautiful place, had a good couple of surfs. And yeah, it takes quite a while. Some people don't realize how big Australia is. So that drive from Sydney to Byron Bay is about 800 kilometers. And then you go past Brisbane to Noosa, and that's another 300 kilometers. So in total, what is that? 500 miles plus 200 miles, 700 miles or so. And it's about the same distance as San Diego to San Francisco. So it's a fair old drive. It's gotten better over the years because they've been improving the freeways along the whole way. So it's not a stressful drive, it's just a long drive. But anyway, we're in Queensland. We're in a beautiful place called Noosa, actually just south of it, a place called Sunshine Beach. So that's the reason for no video last weekend. And we've just been getting our feet under the desks while we're here. Still feel a little bit jet lagged, although there's only a 2-hour time difference between Hawaii and Australia. You go forward in time, so Hawaii is at the end of the day and Australia is at the beginning of the day, and so it's actually Sunday here. I'm recording this in Australia and it's Saturday almost everywhere else. Anyway, it just feels a bit weird. So we're going to do a few things in this video. We're going to go through the charts of the mini day all the way down to the 15-minute and the 13,500 tip bar chart. And I had a request from Critter on Twitter or X asking for a review of the daily charts. So we're going to go through a bunch of those and then we'll do the normal tip bar charts, and I'll try and get through those quickly. And at the end of this video I'll do a little observations about being back on Australia, just 4 little points I want to make. Sometimes people are interested in just when we move around between Australia, France and Hawaii, just seeing what's going on. Anyway, let us get to the charts. And geez Louise, this market. I mean, so what is that, a week and a half? I've been saying we've got to go back down. We have to go back down. It reminds me of a great movie back in, I think, the 80s, The Right Stuff. Do you remember that? It was about the Apollo program, but the real hero of it was Chuck Yeager. And in the very end of the movie, he decides to take up his jet rocket plane and go to the edge of space. And he just goes vertically up, full throttle, until he is right at the edge between the atmosphere and space, and his engine flames out and he tumbles down. He steps away from the burning aircraft and is the hero. But it feels like that to me. We're like just heading right to the edge of space. This thing is pointed vertically up and we're going to flame out any day and twist back down and go hit a real exhaustion cell pattern. And I thought that would happen this week, but it didn't. So there'll be some catalyst. It'll probably be the Fed announcement on Wednesday. There might be some rocky earnings announcements that come out this week, possibly. Maybe Pakistan and India are going to go to blows. Who knows? But it just feels like it's pointing straight up and it doesn't feel right. Short covering rally, that's what it is. And we just push those shorts. All those stops are being hit as we head on up. And eventually, I think, come back down. I don't think this is just a V reversal. We just head to the stars. But anyway, so here we go. This is a better volume indicator, been around for ages and ages. One of the most interesting patterns in better volume is the red, white and blue pattern, where we have, here's a classic red, white and blue. So red pattern is exhaustion buying and then followed by a blue bar, just a little one just there at the highs at 6200, which is a high churn bar, which means relatively high volume and relatively low range. So the market's just churning and churning, and then we get a down bar, an exhaustion sell bar, a white bar here. So that's a red, white and blue pattern there. This one's not going to be a red, white and blue because we've started off with a white pattern, but we have gone to a high churn pattern on Friday. So relatively high volume, relatively low range. So you see these interesting turning points. There's one there. The last time we bounced off this support level, we had one. We had one there at the highs, there at the highs. We had a couple on the way up, bang, 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 but we had one right at the highs there and so on. So they're important. churn bars. So let's see if we get that move back down, but we need to go to the lower time frame charts to show why I'm expecting some sell-off with exhaustion patterns. So here we go on the daily chart, the usual setup on the beta indicators here. Just looking at the volumes, this is all good. This is super high average trade size. Big pros come in here, professionals and big pros, the background's in blue. We had our exhaustion sell here, and we're coming back up to under this trailing stop. Cyclical supports and resistances, we're through this resistance here, and you'll see as we go through the time frames we've just crept on through those resistances. They've come in on the daily charts, a pullback to end of trend. It's got to resolve itself on the way down here. Yes, we've had a triple pattern. Big things happen at triples, and we've had the first sign of strength there, but oftentimes the first sign of strength or the first sign of weakness isn't a good one. It's a good reversal place, if anything. For example, back here on this sell-off, we had the first signal and then we bounced back. It was the second signal, second or third signal was the really good one. That's the daily chart. As we go down to the 135-minute chart here, you can start to see we've only had a couple of blue professional bars here at the lows. This was the extreme selling down here. I think we need to revisit that. We need to go back down to somewhere between where we are and 5,000. Trail the stop down, have blue professional bars coming again at the lows, and an exhaustion pattern, because on this time frame the exhaustion pattern here was getting the move going. We've got to see another one on the way down here. In terms of the cyclical patterns, yeah, we're just pushing and pushing through those resistances. 45-minute chart here. So we did have blue professional bars coming at the lows, but we never saw exhaustion sell down here on better momentum. So we had exhaustion sell getting the move going, freaking people out here with exhaustion buys. This one under the lip as we head back down. And so, yeah, we've got interest by the professionals at 5,000, but we didn't get that exhaustion sell down here, and I think that's what we've got to go see. We've got a minus 21,000 read, which is not big, so we've got to go see a bigger read, something in the region of 60,000, I would have thought. And in terms of cyclical patterns, yep, same thing. We've got all these resistances come in place here. We're just pushing through them. The bars are red, so we're above resistances all the time here. So we're still in an uptrend technically on these time frames. We just haven't rolled yet. And then down to the 15-minute chart here. Here we put on the vertical yellow solid lines to show the beginnings and the ends of the week. So this is the activity over the last couple of weeks. And there's the big pro bars coming here at the lows without exhaustion sell. And we had exhaustion buy getting this move going. We've come into Rambo patterns. We had one at the end of last week. We had a little bit of weakness, but then we got caught and we just pushed on up. And then this week we've got resistance as well. That exhaustion sell was taking profits at the highs. It wasn't kind of bottoming the move as we come through the trailing stop here. So on the 15-minute chart, this 5,600, 5,500, 30 levels key. Let's see if that gets broken in the first few days. We're overshot here. Here are all the pullback to end of trends, rippling through the time frames on the low, on the intermediate time frame. We've also got another low time frame one come in there, resistance on the highest time frame. So we've got a whole series of big things happen at triples coming together here. All those resistances are showing up at the same time. So yeah, at some point we should come back down and go see a proper exhaustion pattern in this region here. And then the 13,500 tip bar chart. We've got a little bit more complexity on this chart here because we've got the squeeze indicator. The two things that are showing up on the boxes here, when the professionals are active at new highs, those are the blue boxes that come in here. And then when we have a squeeze, when all of the support and resistance and the price is really highly compressed, we have a squeeze from which we have a little burst of activity, a little breakout move here. So we had a squeeze here, we broke to the downside. Squeeze here, we broke to the upside. So with this activity this week, we got big pro bars and professional bars at new highs. We've not broken the trailing stop yet there. We didn't have an exhaustion pattern right at the highs. We've got one in the background there. These earlier signals, this one didn't work out. This one ran into Rambo patterns. So that move was being led by the amateurs and it reversed straight away. So that's a little bit of a setup for potentially some weakness early next week. And in terms of cyclical patterns, yeah, the same thing. We're overcooked, all these ends of trends and resistances and so on. But we've not had the break. We've not had the break yet. So we'll just wait and see whether it takes the Fed announcement on Wednesday to crack. But I'm expecting a big momentum read on the downside. So there we go. That's what I'm looking for on my charts, and we'll see if we get it. Now, let us do some daily charts or high-level charts. These are 460 minute charts on the Forex charts, and I think they're 360 minutes on most of the other futures markets. So this is just to look at the high-level stuff. We did a couple of high-level reviews over this year. The most important one was at the beginning of the year, which was saying, what if we got bounces? We had huge downtrends and in the Forex markets and real strength in the US dollar. Everything else was going down. What if a whole bunch of Rambo patterns that we could see in end of December and beginning of January were reversal turning points, and we had strength in all of those Forex markets and weakness in the US dollar? And that is exactly what we have had. Since the beginning of the year, all of those things have reversed and gone the other way. And now you can start to understand what the big picture macro asset planners were saying. They were saying we're overdone with US equities, Magnificent Seven, and there's fair value to be had in these other markets. Look to the UK, look to Europe, look to potentially Australia and so on as opportunities. The PE ratios in those markets are a lot less than in the US, so take profits in the US and redistribute those profits to those other markets, those equity markets, for example. And that's why we would see strength in the currencies as those dollar flows come out of the US and go to those other markets to be invested. So here we go. Here's the euro. Beginning of the year, bottomed in January, and we had blue professional bars come in here, and then when we broke above 106, bang, off to the races. It also ties in with what Donald Trump wants. He wants weaker US dollar. He wants notionally a strong US dollar in as much as it is still the reserve currency around the world, but weaker compared to the other currencies, so that the US goods are seen as cheaper to export. So we've had this huge rally from 104 to 114 in the euro. And this last time we didn't have exhaustion buys up at 16 here, but we've had a lot of blue professional bars coming into those highs, maybe taking profits. So we'll have a little bit of a breather, I'd have thought, in the euro at some point there. British pound, same thing. There we go. The beginning of the year, big pro bars coming at those lows. Here are little blue squares showing that these are blue professional bars. Buying those lows, we get a reversal and we get a signal right at the low down here at 22 and a bit. And we've gone for a nice run from 22 to 34. This last move, we had a sell-off at 28, and then we got bought up all the way to 32s. No exhaustion patterns there, no blue professional bars at the very highs of those moves, but still it's run pretty hard, so we're going to just come off a little bit in terms of the British pound, I'd have thought. Aussie dollar not as pretty a picture down here, because we went to 58s, or near enough, down here at the lows. That was a nasty sell-off, but it was a V reversal here. Blue professional bars, the background's in blue, big pro bars coming in here, and we've pushed forward. I had a trade this week, got out at 64.60 on this on Aussie dollar. Quite happy with that. That was a nice little move. But the Aussie dollar looks like it's got more movement to be had now, so let's see if we get a setup this week to go long Aussie. Japanese yen, a little bit different. Yes, from the Rambo patterns at the beginning of the year that we talked about, we've had this strength. So from 65 to 72, but here we've got blue professional bars coming at the highs. We get oversold, and then we get pushed back up, and that's when the professionals come back in again. So they weren't in at the lows, they've been getting in on the retrace here. But we've not had an exhaustion buy up here, we've not broken the trailing stop. Whether this will just be a simple break down here, or we come back up to test and go down. But we haven't had exhaustion buy. We didn't have exhaustion buy on this move either. So that's Japanese yen. 10 years now. What the heck is happening with 10 years? Yep, we bottomed with Rambo patterns at the beginning of the year, and we've had strength in bonds in general, but it's been a really rocky ride here. So currently we're in a downtrend because we've come back up, amateur up bars under the lip here, and we've come off there. So we're actually in a downtrend in bonds, which would suggest that rates are going to stay where they are, stay relatively high. So let's see what the Fed does on Wednesday. But yep, bigger picture downtrend on 10 years. Gold's been the standout long trade this year from 26 and a bit with a signal. They're at 2800 to a blow-off move at almost 35. And blue professional bars, exhaustion buy, and so on come in there. I don't think it's all over for gold, but certainly there's profit taking happening at the moment on those highs. So the difference between what we're seeing at the moment, what we saw back here, which was mid-24, yes, we had big pro bars at the highs there, but we didn't have exhaustion buy at that point. We just went sideways for a couple of months and then restarted this uptrend. and this is the difference, is now that we've got exhaustion buy and bearish divergence patterns there. So we'd expect some weakness at the moment. What have we done in terms? Yeah, we've broken the trend line, but we've not had a sign of weakness signal. We need a breakthrough about 3,200 for it to signal there. But gold, for the time being, seems to have played that move out. Silver, we got that exhaustion by bearish divergence up at 36 back in November, and all we were doing in the meantime is testing back into that level and then selling off hard. But we're in limbo at the moment. Professionals bought it in at the lows here at 28.29 down here, but we're testing down into that turn at the moment. We've not caught to head back up. So that's what silver seems to be doing. Bitcoin. So meanwhile, gold's played out, but Bitcoin is not. So here we had the breakout move here where we got above 74.75, and this was getting the move going. Then we didn't top out with blue professional bars at the highs. We've come back to test into that breakout level at 75 here, and now we're rallying. So we had a nice squeeze pattern under 90, and we busted out of that into a trending move. We're at 96 at the moment, but no blue professional bars taking profits, no exhaustion buy patterns happening there, and so on. So Bitcoin still seems to be heading up on the daily chart. Crude, nasty down move. So 78's topped out at the beginning of the year. We're down at 56s down here, but we've had blue professional bars come in down here at the lows and exhaustion sell down there. So we've got to put in probably a bullish divergence. We've got to trail the stop down again, but we're starting to find a bottom there in crude, which is interesting. Natural gas had a hell of a run, so look at all these signals going off. So down here, all these blue professional bars at the beginning of the year under 250, we've raced away to $5, but we got exhaustion buy up here and we've weakened from there. The reason we're bouncing up at the moment is we ran into Rambo patterns at $3, so all the amateurs were pushing it down at that point. It's weak. We reverse, go the other way, and we're coming up under the lip, but no blue professional bars come in to trail the stop down again yet. So it's natural gas. And lastly, copper. Shan't do the ags on the daily chart, but this is copper. Yeah, we had this nice move up from Rambo patterns at the beginning of the year, topped out at 540, and then we crashed down to $4, but that's where the blue professional bars have come in, and we've rallied from there, and we've had amateur down bars testing into 460. So let's see if this continues to break back above that $485 level on copper. So there we go, a rip through those higher time frame charts, the 460 and the 360 minute charts, just to see the big picture. But on a shorter time frame, on all the tip bar charts, we could easily see trends that are pointing in different directions. So let's rip through those quickly. Again, beginning, ends of the weeks marked by vertical solid yellow lines. This is Euro 1500 tip bar chart here. We maxed out at 116, all that activity, blue professional bars, we sold off. This week we had one little signal that failed. That was because these blue bars were too far away, but we're coming in now to test at 13. We've got blue professional down bars here, exhaustion sell, bullish divergence. We've tried to break, but it's failed. Let's see if we try to break again above 114, and that rallies on the euro. British pound maxed out a couple of weeks ago. Big pro bars here at the highs. We'd had our exhaustion pattern, bearish divergence. We rolled over, we test, and then another exhaustion buy, bearish divergence, flush pattern. We roll over again. So that's a nice and Rambo patterns up here into those highs. We rolled over. No blue professional bars at the lows. It's Rambo patterns at the moment, but we're still weak there on British pounds. British pound looking weak. Aussie dollar. So Aussie dollar, a lot of backwards and forwards last week, but this week we tested with Rambo patterns and we bounced from there. We've had no blue professional bars or exhaustion buys at those highs, so we're still technically in an uptrend on the Aussie dollar. So let's see if there's an opportunity there this week. Japanese yen weak here, so this is a signal mid-week. Exhaustion sell getting the move going. We topped out over here and we just bounced off blue professional bars, heading back down. No blue professional bars coming at the lows, so still technically in a downtrend on Japanese yen. And here's 10 years. So this week we topped out with exhaustion buy, bearish divergence flush. We got big pro bars and professional bars at those highs. We got our signal to go short, and we're in a downtrend on 10 years. So that suggests that they're expecting the rates to be kept where they are, which is relatively high. And gold actually signaled at the end of last week. Exhaustion sell, bullish divergence, blue professional bars at those lows. No big pro bars there, but we've got a signal. We've tested back into it, so let's see if that area holds and we break back up through the trailing stop on gold. Silver, though, is weak at the moment. We topped out. We had a signal at the end of the previous week. We tested with exhaustion buy bearish divergence, but this area here hasn't held, so we're still weak on silver. And Bitcoin, there we go, nice little trend move. The pattern with the E-mini was almost identical. We've had a nice 3-week run. No blue professional bars at the highs here. Yes, exhaustion buy at that point there, but no blue professional bars at the absolute highs on Bitcoin, so that's still in an uptrend. Crude, this looks interesting. So we got exhaustion sells down here, bullish divergence, pro bars coming at the lows, big pro bars towards the end of the week. We just need to get above 59.50, $60 here to prove that that's in an uptrend on crude. Natural gas, woo, nice move. Started at $3 here, all of those signals coming in. This one was a poor signal, but we didn't have those blue professional bars at the highs up here, but they've come in now. So here we go, a whole series of profit taking blue professional bars. So let's see if we're going to get some weakness on natural gas and a breakthrough 360. Copper topped out here. We had a short signal at the end of last week, but we've had big pro bars come in here and we've strengthened. We've had a signal at the end of this week long. So let's see if copper continues to strengthen. And the ags, corn. So corn's trying to hold this level. We had a signal, exhaustion sell bullish divergence, blue professional bars at the lows, but it's failed. So we're going to have to do that work again. More blue professional bars at the lows on corn. Soybeans topped out at the end of last week, exhaustion buy bearish divergence. Had our signal. We've come back up to test, and it's weak at the moment. So let's see if that continues down with a tight stop. It's sitting there right at that trailing stop. And lastly, wheat. Beginning of the week, there we go. That's what we like to see, all of this. Huge amount of activity where we have exhaustion sell, bullish divergence, blue professional bars, big pro bars, backgrounds in blue. A lot of professional activity interest there. We got our signal, we test with Rambo patterns here, and then we just continue to test and test and test, and then bang, we head up to the upside. So technically still in an uptrend on wheat. Don't particularly like that we got blue professional bars come in here. But let's see if that continues in an uptrend. So there we go. That was a lot of charts, daily and tip bar charts. And I said I'd just leave you with a couple of comments from Australia for the last 2 weeks that we've been here. There were 3 things that Mrs. Emini-Watch and I have noticed. The first one is there's a lot of construction going on. We end up spending time in nice suburbs here in Noosa, Sunshine, Manly Beach down in Sydney. But there's a lot of new construction going on, houses being ripped down and being replaced by big houses, and a lot of renovation work going on. And that's contrasting with the lack of for sale signs. Last year there were a lot of for sale signs on properties. This year hardly see any at all. All of the activity's been moved to renovations and building. Last year it was properties changing hands, but this year it seems like people are upgrading what they have. And I suppose that's because of the uncertainty over interest rates. We've just had an election in Australia this weekend. There's been no change in leadership, but I think people are hoping that interest rates will come down and make mortgages more affordable. Remember that unlike the US, Australia is virtually all a variable rate mortgage scenario. We don't have a 30-year fixed mortgage because we don't have 30-year Australian bonds. And so pretty much everybody, you can fix for 3 or 5 years, but that product is not very popular. And most people are on variable mortgage rates. So it makes a big difference when we have changes, and I think people are just waiting until interest rates come down. But anyway, no activity in terms of sales, I'd suggest. Cost of living is still going up. The everyday goods, milk, butter, coffee and so on, still very expensive and going up seemingly week by week in the supermarkets. Then lastly, a little note about Teslas. Australia is interesting because it should be a fantastic market for everything solar, because we get so much sun and we get uninterrupted sun. Unlike the tropics where you have clouds in the way, Australia doesn't tend to have that, and so we're a perfect use case for solar. Most homes have solar on their roof. It's been a government incentive to get people to use solar and so on. And you'd have thought we'd have had a bunch of Teslas because of that, because you could charge using the solar on your roof and with a power wall, etc., etc. Teslas were expensive. Now the Model 3s and Model Ys are about 55 and 58,000 Aussie dollars, which surprisingly good, I think. But we never previously saw Teslas on the road. And we always thought the reason was because the distances in Australia are huge. So just like I said, we just drove 800 kilometers in a day to get out of Sydney. If you have a Tesla, you'd have to stop for, 45 minutes, an hour and a half to charge halfway, something like that. Because the distances are so large, we don't have a particularly good charging infrastructure yet. I think that stopped people buying Teslas. But seemingly this year is the year when all of that changed, and all the cities that we've been through, we've seen a lot of Teslas compared to previous years. It's still not as dense as, say, the Californian market. We don't have Cybertrucks yet, but all of a sudden Teslas have seemed to have taken off this year, which is interesting. So there we go. Some charts, some local observations. I do hope your trading is going well. Let's see if I'm right and we get a sell-off this week, set off by a Fed announcement. I don't particularly want equities to go down, but I think we do need this test down with those exhaustion patterns. So let's see if I get that right. And good luck with your trading this week.